Hello and welcome to the CIMA Hub's industry analysis for the management case study of February 2017. I'm Hugo Newman and I'd like to thank you for choosing to study with us here at the CIMA Hub. Before I begin, let me just give you a bit of personal background. As I said, my name is Hugo Newman and I hold a PhD in public policy from University College Dublin. My research focused primarily on the interaction between political economy, economic growth and development, and organisational ethics. So I'm well placed to guide you through this component of the preparation process for the management case study in February by looking at industry growth trends, political decisions and how they affect various industries, and the impact of those trends and developments on individual organisations. So if you've read the pre-scene, I'm sure you're familiar with it at this point, and it's dealing with a company called Mentine. Mentine is a large film studio based in a fictional country called Beeland, and we're told that Beeland is a European country. And we're also given an indication that Mentine is quite a big player in this industry. In global terms, it's one of the biggest film studios in the world, and it is the biggest film studio in Europe. Now, this is a fascinating case, I think, and it's a really fascinating real-life industry as well, so we should have a lot of fun going through this industry analysis. One of the things that you'll notice if you have been trying to prepare for this yourself and looking at the industry in the real world, there's a huge amount of data out there, okay? And it can be a little bit overwhelming if you're going it alone to try to trawl through all of this data and information and all of these various analyses and trying to figure out what is true, what is right, and what the implications of these data and information are. So one of the things that we've done for you at the CIMA Hub is that we have rigorously analysed and researched this vast range of data and information. What we've done is we've distilled it down into its simplest and most important parts and drawn out some of the conclusions and the implications of these data for you, for Mentine and for film studios in general as they go through the next couple of years. So we're going to go through the data step by step. We're going to draw out the lessons of each set. We're going to review the most important points at the end of each section. And then we'll give you the implications and conclusions that you need to know about going into the management case study in February. And this then will help you to anticipate what kinds of issues and questions might come up in the case study in February. Okay, so let's look now at the structure of this industry analysis, have an overview of the different sections and what you can expect to cover. First of all, we're going to look at the industry trends, revenue and profitability trends in the last few years, and also at some projections from various analysts and groups about what the industry is going to be doing and looking like over the next few years in terms of these various parameters. In this next section, we'll move on to companies and competitors. We're going to look at some of the major players and major film studios in this industry. We're going to look in particular at one of the most successful companies in the film industry, and also we're going to look at one company in particular which is quite similar in many respects to Mentine. It's a real world equivalent, you could say, for the Mentine company that you're looking at in this case. And we'll look at some of their policies, we'll look at some of these companies' successes and failures, and we'll try to figure out what the formula for success is for these companies. Next, we'll move on to customers, customer analysis. We're going to look at some of the behaviors, some of the demographic figures and data that's out there, and we'll try to draw out some of the most important conclusions and implications of these data for a company like Mentine. Now, the fourth section focuses on marketing, and you may be asking why I've dedicated an entire section just to the issue of marketing. If you've read the pre-scene, you may already know and you may already have an idea, but I'll explain when we come to that section exactly why I've decided to dedicate an entire section to the marketing issue. And then finally, we'll move on to changes, threats and challenges that might lie ahead in this industry, in the real world industry, and how that might feed into the case study in February. Okay, so let's get into it. First, we're going to look at some overall growth trends in recent years, and then we'll look at some projections for the coming years from various expert analysts in the industry. And after doing this, then we'll tell you exactly what factors are driving these trends and how they might be relevant to the Mentine case. So let's start with the global box office revenues for the last 5 to 6 years. Now, if you look at this graph, you'll see the most notable trend is that there's been a fairly substantial growth in revenues. From 2011 to 2015, global box office revenues grew by 18% overall. So that's quite a substantial growth over a 5-year period. Now, if we look more closely at those figures, you can see that the biggest growth came outside the historically largest markets of the US and Canada, with the international market growing by 21% in that period. So the US and the Canadian box office sales only grew by 9% in the same period since 2011. Now, it might be unsurprising to see that lower growth rate in the US and Canada, given that it has been the largest market in box office revenues for many, many decades. So it's a very mature market, and it's not surprising then that the real fast growth is coming from other markets in the world. However, the nature of this overall global growth is quite complex. Okay, as we'll see, we're going to break it down into more detail as we move on. But there's also another point of detail which is very important, and this is really crucial from the perspective of a company like Menteen. Look here at the breakdown. You'll see that the Eurasian African market, which is kind of lumped in together in this particular analysis, is a little bit more ambiguous in terms of its development over the last 5 years. You can see here that it went from $10.8 billion US dollars in 2011 to $9.7 billion in 2015. Now, there has been variability in those 5 years. You had some good years and some bad years, so it's hard really to say that that's a consistent trend that is going to continue. But what you should note is that the European market is much less certain in terms from the point of view of growth in revenue than other markets in the world, as we'll see. So the European market remains a bit of an unknown, and that will be obviously important for a company like Menteen, which is based in Europe and which caters to the European market, among others. Okay, well, let's look ahead now and see what kinds of box office revenues are anticipated in the coming years. Now, of course, these kinds of projections should always be taken with a little bit of a pinch of salt, because it's very hard for anyone to predict what's going to happen in the next 5 years in any industry. In fact, it's hard for anyone to predict what's going to happen in the next year alone. So you should always be very, very careful with these kinds of projections, because of course they're influenced by a lot of unforeseen factors, political changes, and so on. But nevertheless, these are figures and projections that are coming from what are considered to be some of the most authoritative and some of the most respected analysts and analytic groups in the world. So first, we're going to look at something from PricewaterhouseCoopers' recent analysis of the industry, the film industry. So according to their figures, revenues from box office sales are expected to continue their growth as far as 2020. They project a growth from $38.3 billion US dollars in 2015 to $49.3 billion US dollars in 2020. So that's for the world as a whole, box office revenues. Now, just in case you're wondering, I keep using the word box office, box office, box office. I'm sure most of you are aware, but in case you're not, box office sales and revenues refers to the money being paid by cinema goers to see films in movie theaters. Okay, so the box office basically is cinema ticket sales. Now, we have to be careful not to jump the gun here when we see these PricewaterhouseCoopers figures and conclude simply that because box office revenues have been rising globally and are predicted to continue, that the film industry is therefore a comfortable and safe industry, and it's a safe bet for investment. That's a little bit too simplistic, as we'll see for the reasons that I list as we move on. There are growing revenues in the industry, and of course that's generally a good thing from a company point of view. But the more important question is, how profitable has the movie industry been generally, and how profitable is it likely to be in future? Now, these are much more complex and difficult questions to answer. One thing that complicates the picture in the film industry is that box office revenues are not the only aspect of the revenue stream for film studios like Menteen. Okay, there are of course other sources of revenue for these studios. So, for example, you have videos on demand, okay, through licensing with companies like Netflix or DVD releases, okay. So this is after the cinema release has finished, after a film has finished showing in cinemas. There are other additional sources of revenue which can be quite substantial and which can generate substantial profits for film studios. So, for example, licensing to Netflix, DVD releases, as I mentioned, paid digital downloads, and the licensing agreements with companies such as fast food restaurants, as was indicated in the pre-scene. Because these these funds and these revenues come much later and can continue for years after the initial data is gathered, we can only really speculate about overall profitability and sustainability of the current industry model and looking at the previous 5 years. Now, according to one analysis from Stephen Follows of the profitability in Hollywood in particular, he concluded that 51% of movies produced made a profit and 49% made a loss. Now, this is a little bit tricky because, of course, this tells us nothing about the actual magnitude of those profits and losses. And his estimates are highly speculative because they're based on piecemeal data from US film studios alone. But we've already seen that there are a few reasons to be very, very careful with the positive revenue data that we mentioned above in terms of assuming that the positive revenue indicates positive profits. We saw, for example, that most of the revenue growth is coming from emerging markets in Asia, whereas mature markets like the US and Europe have had much more mixed fortunes in recent years, with good years and bad years in between. And so trends are harder to determine. And this makes predictions a little bit harder, both in terms of revenue and profitability going forward. General expert opinion is that 2016 in particular was a disappointing year in terms of box office takings in the US, and that this reflects a fundamental shift in consumer behavior. Now, we're going to talk a little bit more about consumers in the next few sections, and we'll go into detail about the various theories about their changing habits. But it is the case that often consumer habits in the US are an indication of consumer habits elsewhere, further down the line for developing countries and in particular for Europe. So we should bear these kinds of theories in mind when we're thinking about Menteen and their strategies in the future. Now, according to Business Insider, for example, the summer of 2016, the box office performance was particularly disappointing in the US, with a 3.5% drop in attendance from the previous summer. And if we go back further and look at from 2006 even, we see that there's been a very discernible and steady decline in attendance figures to the present day in the US and Canada in particular. Now, according to one New York Times analysis, the reasons for the decline have to do with a number of factors, some of which include the comparative ease of other forms of entertainment and access to movies through other sources like HBO Go and Netflix, as we mentioned. There's also the increasing cost of movie-going. According to the New York Times, it's now $17.25 per adult at the ArcLight chain in Hollywood to see a movie at the cinema, and that's before you take into account things like 3D surcharges. And then there's the movie business itself, which has aggressively pushed one kind of event movie, which the New York Times calls the lumbering visual effects-driven sequels, at the expense of variety in genres. Okay, so these are kind of speculations, but they may have some bearing on the kinds of choices that consumers are making in terms of buying cinema tickets and the dropping attendance figures in the US and Canada. Now, there is a theory that sequels as well are cannibalizing each other. Now, what does this mean? Well, this means basically that whereas before sequels had a kind of hype about them because they were often separated from the originals by many years, and they were only released if the originals had been box office smashes, now most big budget movies are made with a sequel either intended, okay, or already under contract. So audiences, according to this theory, have become kind of desensitized to sequels and to their novelty and to the hype that surrounds sequels and that did surround sequels in the past. And because of this, the market has become kind of oversaturated with sequels, and that this is causing cinema goers to become less interested in general in movie releases. And there are other theories as well. So, for example, Wired recently ran a very, very pessimistic article which claimed the death of cinema. Now, maybe that's an exaggeration, but their theory at least is that the prevalence and wide availability of portable video technology, in terms of smartphones, for example, 4G and Wi-Fi being very, very common, very widespread, and other cheap sources of media video, it's dampening in general the appetite for cinema. And this is what we've been seeing since the early 2000s. And it's discernible in the much lower attendance figures in the United States and Canada. I think there's an element of truth to all of these theories, and we're going to come back to some of them in the next sections and discuss them in a little bit more detail. But what I want to focus on now is the emerging markets in the global scene.